Now we'll move on to looking at a profit and loss account. What you have in your handouts on page 2 is an example of a profit and loss account for Corset Limited. And what we see at the top is that we've got sales turnover, and we've got 2 types of income coming in. One's for retail sales and one's for a grant. And that total comes to 48935. From that, we minus the cost of goods sold. And your cost of goods sold is the cost you incur in getting your product or service, your product really, into stock, into sale, the cost of those goods sold. So you'll have stock plus any purchases you've made minus any closing stock. To that you want to add any carriage inwards or shipping costs that you incur, any direct labour costs, any costs specifically with actually selling that product, and any discounts allowed. The total of that comes to 2505. And when you minus that from your sales turnover, you're left with your gross profit. Now, for sales, there's some terminology here just to be familiar with, but sales turnover or sales or just turnover, it's the same thing. It's the income that you will be getting. You take off the cost of goods sold and you're left with the gross profit. And then from the gross profit, you would then take off all the other eligible expenses, and at the end, you're left with your net profit before tax. And in this example, it's 8,903. Now, sometimes people wonder, okay, running a business, what expenses are eligible? And the answer is, any expense you incur in the course of doing business is a business expense. So the list we've got here is just in A to Z order. We've got accountancy fees, any advertising, PR, conferences, rent, software, travel. It's all a business expense. So in the course of you doing your business and sharing the opportunity with other people, if you're on the phone a lot and you might be talking to friends and family, your telephone calls is still a business expense because you're talking business. If a bit of personal chit-chat that comes in there, then that's just a sideline, because, you know, we're doing business and often your clients will become your friends. So just the sort of benefit you get from that. Then if we take a look at a balance sheet, we've got the first half of the balance sheet, and this is on your page 3, and this is still for Corset Limited, fictitious company. We have fixed assets to begin with, and your fixed assets are things like vehicle, equipment, items used in doing the business. That's followed by current assets, and current assets are things that are, for example, stock, because you're going to turn this stock into cash. Your stock that you purchase is an asset. You've got debtors. Debtors are people who owe you money. And you've got deposit accounts and cash that you might have in hand, like any petty cash. And the total of those in this example is 6,193. And then we've got current liabilities. And those are things like creditors, also known as suppliers, people who you owe money to. You've got the inland revenue. In this example, we've got an overdraft as a liability, wages and salaries. Anything that you've got to pay within 1 year is a current liability. And when you take your current assets from your current liabilities, you're left with what's called your working capital. From the working capital, if we move on, just taking it down, we then have your total assets minus your current liabilities. Then we take off loans or any other creditor, any other amount that you need to pay within, well, you've got more than 1 year to pay it, such as loans, and then you're left with your total assets. And the point of a balance sheet is that the thing does balance. So you'll have an amount which is your capital and reserves, which is carried forward, and your retained profit. And the amount balances, and we can see on here it's 9,403. Now, you're not expected to have to draw up a profit and loss account or balance sheet. It's the kind of thing that an accountant does. But it's still useful just to get an idea of where certain numbers arise in the business. A bookkeeper is the person who puts the figures together for the accountant to then be able to prepare this type of information. And if we look at just go to the next slide, which is this idea of assets and liabilities. Now, on a balance sheet, the balance sheet is the place which lists all of your assets and your liabilities. But it's very much, when running a business, what we really have to understand is what assets are and what liabilities are. And the key sort of thing to bear in mind is that assets are what feed you, and liabilities are what really eats you. And what most successful people do, people in business, is that they fill their balance sheet with assets. And assets are the kind of things that put money in your pocket. And this opportunity here on display today is an asset. It's an opportunity for you to build a business and be putting money in your pocket. So this is what most people don't do. If you build your business consistently, on a consistent basis, then it will grow in value and it will be a big asset.